we have a total banking sector loan book outstanding, which is about 100 lakh crores. And the total capital of the Indian banking system is between 11 and 12 lakh crores. Now, we can debate what the number of loss will be. Now, even if you take a hypothetical number, which is set 4 to 5 lakh crores over time, we are talking about, say, even a 4 to 5% hit. That is talking about a number which is 40% of capital. Some of it will be made up by bond gains, which most banks have on their MTM portfolios. Having said that, even after the gains, there will still be a need for risk capital. And I do believe that the government in its array and the bouquet will have to plan down the road some capital available for the public sector banks. As far as private sector banks are concerned, as also NBFCs are concerned, I think we have had a very, very fine capital markets over the last few months. And capital markets are there as instruments for companies with good governance practices to be able to go out there and raise capital should they need risk capital. And therefore, the market mechanism is a great basis for beefing up risk capital for financial institutions. And my personal advice to all financial players is raise capital. Don't be too fussed about getting the nickel dime on the last rupee of pricing. I will recommend every real estate player to move the inventory and make it clear the stock they have. They should not be looking at the rear view mirror in driving a car. When you're driving a car, look at the screen in front of you. Piche kya tha is a wrong way of going forward. Therefore, real estate industry must clear its inventory. And remember the positive side of this. बहुत से लोग ऐसे थे जिनको घर ओन करना महंगा था. Now, if the prices drop, people who have not bought homes for decades and the price drop is significant, you will get new home buyers who have otherwise struggled to buy. Look at the positive side of lower prices for homes. And the reality is, if I have bought land at a high price in the past, it is irrelevant for my decision today. I have to take the pain. Back to my point, the pain will have to be taken, clear the inventory. And if we can create a consumer market back where people buy homes at affordable prices, it is good for all Indians.
The question of moratorium, the question of restructuring is actually a very interesting question that CII has suggested to the RBI to evaluate it. We believe that on certain type of loans, maybe short tenor, small value loans, this may not be required. But there could be loans, whether to MSMEs, to mid-sized corporate, where a one-time restructuring, which is really at the I would say available to the lender, to the bank, to the NBFC to give wherever there is merit. This is something that could make a positive difference. So we are hoping that this is something that the RBI would take into account.
To me, there are 2-3 factors which are important to get private investment back. Firstly, demand growth. And obviously, last year the economy had slowed down a bit. And this year we have COVID. So I think the actions taken by the government to spend on infrastructure and to start creating demand by allowing more liquidity into the system, I think that's one thing which is important. The second thing which helps private investment is the profitability of the industry, because obviously if you have surplus cash flows, if you're profitable and there's demand growth, then you have surplus to invest. I think we need to get these two conditions back. And that certainly there will be private sector investment, because fundamentally India is macroeconomically in a good place. It's a growing economy. It's a consumption-led economy, which is shifting a bit to an investment-led economy with public sector investments. So I'm positive over the medium to long term.